It does take us to our talk of the tape, this record-setting run for stocks and how dependent it now is on the Fed cutting interest rates this fall. Let's ask Tom Strat's head of research, also the BitMine chairman. He's here with us at Post 9. It's good to see you.
Great to see you, Scott.
So how about that question? I mean, it's on a couple of fronts. Like, we came in to this week, which you said was going to be the start of a pretty good rally, which it kind of looked like it was. Now what?
I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
Sure, I agree, and people have said that throughout much of the day, but it seems to have changed the conversation, if nothing else, about the amount of rate cut we might get in September. Is that fair?
Yes, it's very fair. That is correct. But if, as we think about the rest of this year and next year, I think that the thing that's the worst case for investors is Fed hiking. If the Fed does nothing between now and year end, I think some would actually argue that's half full because the economy can handle these higher rates. But if the Fed does 25 or 50 between now and year end, really to normalize real interest rates, that's actually positive for stocks. So I think unless this was going to bring in the odds of a hike, I think that's why markets had a muted reaction.
Well, what if they don't do anything? I mean, Steve Leisman, who's going to join us in a minute, made the argument earlier today that this changes the conversation from 25 or 50 to 25 or nothing. What happens if we go on the side of nothing? Can this market stand up under that?
Yes. I mean, because number one, and I'm sure Steve's going to talk about this, the economy doesn't seem to be suffering under the weight of these current interest rates, even though the Fed is much higher than the rest of the world on policy rates. And the second part of that is, of course, that if the Fed does 25, it's still a dovish move.
Well, it could be a hawkish cut. And Leisman's thrown out that too, right? If they cut 25 and leave us with the feeling like, all right, you got your little lollipop here, everybody, and now we're going to wait and see.
Yeah. I think the market reaction, of course, is really how people are positioned. And we at Fundstrat, we're finding a lot of investors are positioned as if we're going to see a pickup in inflation. So to them, they were expecting a really hot PPI number, thought this was going to start a decline in stocks. And that's why I think markets didn't fall as much, because I think many people have been positioned for a sort of a hot set of PPI numbers.
So